Good morning, ladies and gentlemen. Welcome to Market Forecast, brought to you by Options University. This is Butch Shorek. It's Monday, June 9th, 2014. Access to this video is for educational and informational purposes. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Option University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We are not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. With that thought, can we say a breakout? Look at the indexes this week as we see them all giving us numbers that we can be proud of if you're a bull. Look at the Dow, NASDAQ, S&P 500, Russell 2000. We see positive numbers in all of the indexes this week as we see the Dow up 1.2% for the week, up 2.1% for the year. NASDAQ up 1.9% for the week, up 3.5% for the week, showing us positive numbers all across the board. S&P 500 at 1.3% for the week, up 5.5% for the year. And finally, the Russell 2000 leading all of the markets up for the week, up 2.7% as we finally broke the doldrums in the Russell 2000 in our small caps and finally into positive numbers year to date, up 0.1%. All new time highs out of the S&P 500, all new time highs out of the Dow. What more can a person ask for if you're a bull, as the market just keeps plugging along, as the indexes keep plugging along, as we see that you shouldn't fight the Fed. What kind of economic announcements do we have during the last week? Obviously, none of them hurt us last week. What do we got coming this week? Let's take a look and see what we've got going. Looking at Monday, we see very little happening in the economic announcements that'll move the market. As we look at Tuesday, again, very little happening. So a week not filled at the beginning of the week with much information, allowing the market to flow wherever it wants. Looking at the Treasury budget, 10 o'clock, petroleum report on 10:30 on Wednesday. And then Thursday, we have a day that's actually got some information in it. Notice Thursdays have been pretty heavy as we looked at the last few weeks. And we have jobless claims that take place. That's our weekly jobless claims every single Thursday morning at 8:30. Retail sales coming out at 8:30. Import and export prices at 8:30. And finally, business inventories coming out at 10 o'clock. And then Friday, we have consumer sentiment at 9:55. Certainly one of interest to us as we see whether in this consumer-driven market, whether the consumers continue on their positive trend. Looking at the SPX for the overall trend, we'll look at a 3-month chart, and we see that we had a sideways trend going on much of this year. And we have now broken out of that sideways trend. The trend of basically we were getting higher lows, but for quite some time we had months of sideways movements. Every time we get a new high, we would get that new high, but we wouldn't break months above it. Can you say breakout? The last 2 weeks that you've got 1900, no longer an issue. 1949, no longer an issue. Already been there. 1960 coming up. That'll be our first goal. Is 1960 is our goal for the next segment of this market. Let's take a look at the last week at a little closer chart so we can see what happened a little closer. Looking at the last 5 days, we saw Monday and Tuesday not showing us much, and then what happened on Wednesday, Thursday, and Friday, we call that a nice move up. Long way away from that moving average, so it might not be the best time for the bulls to jump into the market, as we still have a little more room to the upside as in expectations. But the question is, everything is as you get away from the moving averages, everything returns to the mean. Looking at the Dow, which also got all-time highs this past week and basically closed there on Friday afternoon, we call that a breakout, and it has joined the S&P and giving us highs that we've never seen before. Looking at the NASDAQ, well, we don't have all-time highs, but we are approaching our previous highs for the year as the NASDAQ has begun to show some life the last couple weeks, and we see a combined market, which is exactly what gave us these new highs out of the SPX and the Dow. And finally, what led the week? Well, it was the one that was the most beaten up, and that was the Russell 2000. Look at that move on Thursday, and a gap up on Friday and even higher. How high will this go? Well, we've got resistance up there at around 1210. So we'll see whether we keep on going and the small caps can join the rest of the market with all-time highs. What kind of fear do we have in a market that has this kind of moves up? Well, there's obviously very little hedging going on. As we look at the VIX, down at 10.73, we're down at the lower levels that we saw during the rally year of 2013. So down 10.73 on the VIX, as there's very little fear in the market, very little hedging going on as we looked at the last week. And then finally, taking a look at some of our other sectors, let's look at TLT, our bond market. We see that it came down to that 50-day moving average and bounced up. Bond market's definitely in an upward trend as we have the 30 above the 50-day moving average, which is above the 200-day moving average. So watch this. If the market pulls back, we could expect to see this pop a little bit higher as we see the bond market looking pretty darn healthy in this what has to this point been a flat economy in 2014, but now we're seeing a summer rally. What happened to the rule go away in May? Is this an exhaustion rally? Well, we'll see, but we certainly have a bunch of decent support at that 1900 level. Looking at gold, GLD, not showing us any strength whatsoever. Kind of bottomed out at 120, and we had a little bit of a bounce towards the end of the week, but definitely in a downtrend as gold is not showing us much of anything at this particular point. Finally, let's take a look at the volume that took place. A look at the volume higher on Thursday and Friday as we saw the market make its big move with its breakout from that 1925. So we're seeing good move out of the SPX. Volume was pretty much average the last couple of weeks, and then all of a sudden Thursday and Friday we get that big pop, as economic news certainly give us nothing to worry about. And the ECB, for the first time in the history, had negative numbers on their rates. So that also has an influence on the overall market. Looking at the financials, the XLF sector, look at that. New highs for the last 3 months as we see XLF pop out and joining everything else, giving us nice big numbers. We got a crossover where the 30 is above the 50 again on the moving averages. So XLF looking real positive as we entered this last week. Remember, everything's a little far away from the moving average. All things return to the mean. So this is a point where we're looking for some kind of a pullback, but that pullback is not quite there yet. We're expecting at least somewhere around 1960 out of this market. We'll see what happens as we lay in that top number and establish our new trading range. All right, and finally, let's take a look at oil. Oil had its move up, and we see it bouncing around, staying above that 30-day moving average in an uptrend, 30.50 above the 200. Oil, stock to watch, and as we come into summer, we generally see oil go a little bit higher. So for those of you that are gold members, stick around, and we'll look at our stocks to watch. For those of you that are not gold members, if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought, congratulations. We're happy that you were here with us at Market Forecast, brought to you by Options University. This is Butch Shorrock. It's Monday, June 9th, 2014. Trade what you see, not what you think. And with that thought, we'll see you next Monday. Thanks for being here. Market Forecast.